This week we're going to preview USDA's monthly supply-demand report that will be released on Friday, July 12th. We're also going to take a look at updated crop progress and short-term weather trends here in the U.S. We're going to wrap things up with a long-term review of November soybean futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved in the second week of July here, and weather will become ever more important for beans moving forward. However, before we talk about weather and crop conditions, let's take a look at the preview of the USDA supply-demand report that will come out on Friday, July 12th. Let's take a look at the trade estimates. A lot of numbers here as usual we've highlighted for beans: crop size, yield, and ending stocks. Of all those numbers, I'd say ending stocks for 24-25 are most important. That's a very wide trading range of 350 million to 572 million bushels on that trade range. USDA is at 455 last month, average trade estimate at 447. So any surprise to the upside or downside in those stocks could move the market. This is why it's so critical to work closely with your trusted risk management advisor to have your risk management positions in place prior to the release of the report. And that's what this next slide underscores. What this slide shows is the change in November soybean futures on the day that that report is released. For example, in 2016, we saw the market close 32 cents higher, but in 2022, it closed 62 cents lower. Here's the key message. Price is unpredictable. There's actually been years where it's hardly budgeted at all, for example, 2018 and 19. But it's critical to be prepared with your risk management strategies in case additional price volatility is seen in association with this report. Let's now take a look at crop condition ratings here. We did see the bean crop improve slightly this week, from 67 to 68%, good to excellent. The vast majority of that improvement, as you can see, was east of the Mississippi River in the eastern Corn Belt, as well as Illinois, Wisconsin. Did see Iowa and Kansas improve. We did see some deterioration up in the northern plains, however. Let's take a look at our aggregate soybean crop condition index for the second consecutive week. You can see it improved, and we're seeing some of the highest ratings we've seen in recent years for this early July time period. Let's now take a look at crop progress here. Soybeans blooming at 34% as of July 7th. Looking forward now to the next 2 weeks, on average an additional 32% of the beans bloom between July 7th and the 21st. That would put us at about 2/3 of the bean crop blooming as of the July 21st date. Of course, as beans bloom and move into that early pod set stage, weather is critical. Let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out this week looking at the last 30 days, proxy for subsoil moisture. Notice in that western belt, plenty of moisture. Notice, however, the dryness had been seen prior to the arrival of the remnant of Hurricane Beryl in Illinois, Indiana, and Ohio. That's why that rain that was seen earlier this week was so critical for those areas. We're going to look beyond the short-term year impact of Hurricane Beryl and look forward to later this week and next week. We're looking at a change in temperatures here, July 11th to the 22nd, a heat wave moving into the Dakotas in that dark red area, 90s to 100s moving into that period. Now rainfall, Friday through Monday of this coming days, the best chance for rain in that pink area. So most of that rain is going to be up in the northern area and the eastern part of the belt. Look forward to next week, July 16th to the 17th. All that green area highlighted is 1/4 inch to 3/4 of an inch. Let's quantify rain now over the next 2 weeks. You can see there's quite a divergence over the next 2 weeks. Very dry in that western Corn Belt, but the remnants from Hurricane Beryl provide that moisture across Illinois, parts of Indiana, Ohio, Michigan, and gives that area slightly wet conditions. Let's wrap things up this week looking at trends in November beans. Now, November beans have collapsed here, and as we tape on Tuesday, have fallen all the way down to $10.80 a bushel. But however, look at that trend from early July all the way into harvest. Still potential for quite a bit of price volatility. This is why we continue to urge you to work closely with your trusted risk management advisor to manage price movement. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an upload. And remember, this Friday, July 12th at 1:30 p.m. Central Time, we'll provide a deep dive live YouTube update of the USDA report. Thanks a lot. Have a good week.